All right. So would you mind just sharing a little bit about the mortgage rate relief program you guys have going on right now?
Yeah.
So we receive a fair amount of phone calls and from new clients, lead generation places, and ultimately, it's really important. I can't stress this enough in a competitive market that you have to have your lending kind of in place. You need to figure out what kind of lending, because every type of lending has different requirements on the house, and it kind of helps us lead the path. And we want you to call us. We'll give you some referrals to some good lenders. And what do you think about what's important, and why do you feel like that's important?
Yeah. So basically having things ready to go, and that could be right after the phone call, but knowing where your W-2s are, 1099s, tax papers, whatever it is, kind of having those ready, have an idea of where you're sitting with the credit report. Those are going to be some of the first questions I assume you're going to get from a lender. So just kind of having those papers ready to go and kind of knowing your numbers and maybe thinking of a budget in your head too of where you'd want to sit monthly.
And also, it's super important because you may go and we may show you a house and you may love it and you're not quite prepared, and you end up losing that, and then it's a disappointment for everybody.
Right. I mean, if weekends or, day of, you go to look at a house, and if it's moving quickly, you're not going to have time more than likely to get that pre-approval done and actually be ready to write that offer.
So Lexi, if we could ask, what do you feel like most people are either the most concerned about or they're nervous about, or how does the process go? If you can maybe just talk a little bit about that.
Yeah. So it's really going to come down to probably credit, job history, and income. So maybe you have some derogatory items on your credit and you're wondering whether that will affect my approval. Can I still be approved maybe if I have a late payment or I owe some money? And the answer is it kind of depends. Some loan programs are maybe a little more forgiving for some past credit items in there. The next thing, maybe you say, oh, I've only been at my job a few months. We're going to go back and look at a full 2-year job history. So you don't need to have been at your job for 2 months. Doesn't hurt to
2
apply.
years.
Yeah, 2 years. Yeah,
Yeah.
thank
Yep.
you.
Yep.
And with that, I'm also going to do my income calculation. So as a lender, I'm going to look at your gross income. So I'm going to be looking at a different number than what you take home on your paycheck every month. So I heard you talk about the budget, which is very important too. So maybe what I say you qualify for on paper is different than what's really comfortable for you.
Correct. So how does it work with, a W-2 employee, someone that has their own business that may be a 1099 or have their own limited liability company? How does that stuff work?
Yeah, so those self-employed borrowers, they're a little different than our W-2. We are going to look at a 2-year average. We just want to make sure that your business is, established, going to continue, you can keep making money. So with that, we usually will look at your income over the last 2 years. A W-2 employee, it's likely you're going to be getting raises year over year. So we're probably going to be looking at what your current income is rather than looking at an average over the last 2 years. However, we want to see that your income is increasing.
So one more quick question with that. So as you take kind of a profile of their financial situation, do you kind of partner them with the right program? Because obviously there's a lot of programs out there.
Yep. So, when we're talking mortgage programs, we're probably going to be looking at a conventional loan or an FHA loan or a USDA loan. All of those programs are going to be a little bit different, and there's one that's right for every borrower. So, maybe you have a lot of student loan debt. We're going to maybe want to look at a program that looks at your student loan payments a little bit differently than a conventional mortgage loan. Or maybe you have some collections in the past. We're going to want to look at a program that might be a little bit more forgiving if there's some past items on your credit.
Nice. How about a couple bumps in the road, and are you going to kind of guide them to maybe things that they need to fix, and maybe, because I think that's pretty normal. I think both Dylan and I have experienced this where we start with somebody and they can't quite get qualified, but they take a little bit of time, prepare and improve their credit, or have to do a few things to take care of something, or to consolidate something, or pay something off so they qualify. And, it kind of helps. So.
Right. And I mean, we've all been through things, we've all done things that we wish we could do differently, but maybe if we do your pre-approval, we look at it, maybe you're not quite ready yet. That's a lot of people I talk to. It's easy to set up action steps. We say, these are what must be true until you're ready to buy a house, and then maybe we follow up, 6 months from now.
Perfect.